Most traders saw this morning's gap down and immediately jumped into short positions. But that was the ultimate trap. While the crowd was fighting the trend, a clear structure change on the 20 EMA signaled a massive reversal. By spotting this trend change early, I avoided being on the wrong side of the market and saved myself from heavy losses. Today was a masterclass in market psychology. Even though I don't primarily trade options, I tracked the setup closely. The call buying setup around 1 pm actually resulted in a small 15-point loss. But as a disciplined trader, you take those small hits with your head high because the setup was right. More importantly, I use this nifty bullish conviction to pivot into stock trades, where the trend confirmation helped me to book profits. Let's look at the nifty behavior on these option charts first to understand the why behind the move. Let me show you exactly where we got a trend change confirmation based on 20 EMA structure. For that, I will just hide these particular candles. See here what is happening. What was happening from last day? Nifty was making lower highs, right? See here. This was the lower high formed. Again, this was a lower high formed. These lower highs never break by the Nifty, right? For, see here. Then there is no any lower high formed. But if you see here, again it has formed lower high here, right? Proper U shape has formed. See, this is again a lower high which is formed today morning. And then see what happened. In 10-10 candle, this lower high was broken by the Nifty, and that gave me the confirmation that now there is a trend change. This is how I always prefer to check the trend change, not based on the candles. I always use 20 EMA, plain 20 EMA. Now let's move to the option charts. Once I got a confirmation that there was a trend change, then I was looking for only call buying opportunities. Though I don't personally trade, but I was just looking on the chart that where whether there are any call buying opportunities setups are for me. So see here, 20 MA was below 50 MA, so our primary filter is saying no for call buying, right? Here, if you see, this 20 MA has crossed above 50 MA, and both 20 MA and 50 MAs are trending up here, correct? See here, 20 MA is also trending up, 50 MA is also trending up, and here the three candle theory setup was formed. First candle, second candle, which has broke the low of the first candle, closed above the low of the first candle, third candle respected the low of the second candle. So this was the perfect three candle setup. Also, green candle has the highest volume, so we can take trade here as per the setup. So at high there was a trade at around 133. For example, the high is 131.25. So we will take some buffer and take a trade at 133. Low was 112.35. So we will take a stop loss of 111. So your trade was executed at 133. See what happened. After trade got executed, what would have happened? This 20 MA candle, sorry, 5-minute candle closed below 20 MA. So now you have to shift your SL to this low. So if you have shifted your SL to this low, that is 118, then your SL would have got hit, right? So at trade was at 133 and your SL was 118. So you would have lost around 15 points in this particular trade. But no worries, if you are following the sorry, if you are following the setup, then always be happy to give those small losses. Now let's see what happened next. Now again market start trending up, right? But here there was no setup. There was no setup form, so there was no trade. Also, this candle, green red candle has the highest volume, so this trade we can't take. So overall there was a one trade only, and here we have booked 15-point loss. That is fine. Now let's move to the put chart. What is happening there? See, what our primary filter says, that we will take trade if 20 EMA is below 50 EMA, then only we will go for the option buying trade. Here 20 EMA was above 50 EMA, but we get a confirmation around 10:10 that we don't need to get a put buy trade, right? Because there was a structure change, trend change as per 20 EMA on Nifty chart. So if you see what happened after that particular point only, here also see 20 EMA start trending downwards, right? So there was no trade opportunity. Now after this particular point, 20 EMA is below 50 EMA, so there was no trade for the whole day in case of put options. So overall, if you have traded options today, there was a 15-point loss incurred. Now, here is the real power of today's analysis. Once Nifty confirmed that structure breakout above the 20 EMA, the probability of any buy side trade in the broader market increased significantly. Instead of fighting that index, I leveraged Nifty's strength to identify high momentum stocks. This is how you use the market king to filter your stock picks. Let me show you the specific stocks I traded and exactly how Nifty's trend gave me the confidence to hold for targets. Let's move to the stock trades now. For stock trades, let's select 15-minute time frame. See here what is happening. 20 MA, 50 MAs are in uptrend. Green candle has the highest volume. This is a perfect three candle setup was formed. Green candle has highest volume. So at high, my trade got executed. Low was my stop loss. And at the end of the day, I closed this trade in a small profit. I don't get too hard profit here, but that is fine. This was my next trade, that is Indus Towers. See what happened. First candle, second candle, third candle. 20 and 50 MAs are trending up. Green candle has the highest volume. So I took a trade at high of this candle based on three candle theory setup. Trade got executed and I closed this trade in minor loss at around 3:14 p.m. This was my next trade, that is the Max Financial Services. Here again a three candle setup was found. First candle, sorry, this one first candle. First candle is a red candle, second candle and third candle. Okay, this one, sorry, I have just marked wrongly here. Yes, this one. First candle, second candle and third candle. Okay. One second. So this was a perfect three candle setup. 20 MA, 50 MA trending up. Green candle has the highest volume. Took a trade at high of this candle. Low was my stop loss. See what happened. This 20 MA, this 5-minute candle closed below 20 MA. So I have shifted. I haven't shifted because there was only 1 or 1.5 points of difference in my stop loss and uh, this 20 MA candle low. So that was the perfect point. I always keep that much buffer whenever I am shifting the stop loss based on trailing SL. Here my stop loss got hit. Fine. So I booked loss in this trade. Next trade was in CG Power. Perfect three candle setup form. First candle, second candle, third candle. I took a trade at high of this candle. Low was my stop loss. But I don't get a target here. And I close this particular trade at around break even at the end of the day. This was my next trade in Astral. First candle, second candle and third candle. Second candle has crossed low of the first candle and closed above low. Third candle respected low of the second candle. So this was a perfect three candle setup. Green candle has highest volume, 20-50 ms trending up. Took a trade at high of this candle, low was my stop loss. Stock was trending for the whole day and I got a target at around last candle. So I booked here 2 hour profit in this particular trade. This was the trade which helped me to book a good profit today. So overall, it was a good profit day for me. To summarize today, The morning gap was a fake out. The 20 EMA was our compass. And the trend change was the key. We accept a 15-point stop loss on a setup because that discipline is what allows us to stay calm and capture much bigger moves in individual stocks. If this analysis helped you see the market more clearly today, hit that subscribe button. I post these daily breakdowns to help you master price action and trend identification. I want to hear from you. If you have any doubts regarding trend identification using 20 EMA, drop your comments below. See you in the next one. Thank you, everyone.